The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Morning, all you wonderful money masters and treasure hunters. Welcome to the February 24th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Hope everybody out there had a fantastic weekend. Welcome back. Let's get the show started here. Let's go take a look at one of our tools. This is the tool I call "What is done is done." Now, that was a quote by William Shakespeare. But it brings about a story of two Zen monks. Two Zen monks were on their way to the market one day when they came upon a large mud puddle that prevented them from continuing on without getting dirty. Standing next to the puddle was a young maiden who wished to continue on, but also didn't want to get dirty. To solve the problem, one of the monks offered to carry her across the puddle, even though this kind gesture violated the vows he had taken to never speak to or have contact with the woman. Once safely across the puddle, the woman thanked the monk and went on her way, and the two monks continued on their way as well. However, they did not exchange a single word for the remainder of their day. That evening, as they returned to the monastery, the monk who had watched the other monk carry the woman across the mud puddle accused his friend of being unfaithful and sacrilegious. It didn't end with just one comment. It went on and on, over and over again, with the monk asking, "How could you take your vows so lightly?" This angry tirade continued on for well over an hour. Finally, the monk who had done the good deed turned to his fellow monk and said, "I'm the one who violated my vows by carrying the young maiden across the mud puddle. But whereas I set the woman down on the path many hours ago, you continue to carry her." Question: do you carry your burdens with you? What have you packed in your mental suitcase? Is it carry-on luggage or is it an overnight bag? Something to think about. Folks, what is done is done. Well, let's go check out and see what these markets are doing, not what they've done here. Well, we can see what the futures have done here right now. Dow futures are up 24 points. They're trading out at 16,116 right now. S&P futures trading up about 4 points out at the 1838 level. NASDAQ futures up 9 points at 3673, a little bit of change. King dollar up about a nickel right now, trading out at 8031. Not a ton of movement here in the currency market. Hard currency, we got Goldilocks up 950. She's trading out at 1333. Silver up 22 cents, trading out at 2205. Light sweet crude up 30 cents, trading out at 102.50. Our call-in number is 877-927-6648. If you give us a call, we'd be happy to field your question, answer your question, whatever I can do to assist you. If we take a quick peek around the globe out here, we'll see red arrows across the board. You've got the DAX down 10 points, the FTSE off 11 right now. Not a lot of damage down there. Both of those down 0.1%, 0.2% perhaps. The Nikkei was off 0.2% last night, down 28 points. Hang Seng, I was off 0.8%, off 179, and the Shanghai down almost 2%, off 39 points. So, where do we begin our day? Let's go start off with hi-ho silver out here. Let's go take a look at silver. It is, if you are following along with us on TigerTV, thanks so much for doing that. If you're listening on the radio or your mobile device at TFNN.mobi, do not forget you can always get this show streaming live to you by going to the homepage of TFNN.com. Upper right-hand side, you will see little button, 3 little smartphone devices on it. Click on that. This show will stream live to you. Right now, what we're looking at is a chart. In the archive of the show, by the way, it's on Channel 9. We're looking at the daily chart here for silver. Well, what is it that we know about silver right now? Well, first, it's trading at $22.02. It's trading slightly above the 200-day exponential moving average. That has acted as resistance now for the last 4 trading sessions. The actual 200-day exponential moving average, to give you the price, right now it's calculated at $21.94. You're at $22.02. If we take a look here, we know that silver's made that 100%. It's made that measured move. Almost said 100% move of a move, didn't I? It's made a measured move, and that was the consolidation pattern that it traveled in. You want to identify consolidation patterns as soon as you can. If you are, the only way to trade consolidation patterns, you short them from the top and you buy them from the bottom, and then you sell or buy whichever breakout occurs. In this case here, silver broke through its consolidation pattern, did it with a nice wide-ranging bar that was on February 14th, a couple of Fridays ago out there. And it made that measured move. That if you're watching us on TigerTV, those are the 2 little yellow rectangle, rectangle type boxes on my screen. Now, what happened on Friday? You may say, "Hey, Steve-O, not much." Well, I'd beg to differ. I'd say on Friday, you're coming into a resistance area, and you made a doji candle. You've got a couple of different reversal candles up here right now. You have this little dark cloud cover candle that occurred on February 19th. Didn't really get any follow through here on February 20th, so I kind of somewhat ignore that candle session out here. But what we also got on Friday was we had an open and close that were basically about the same thing. $21.82 was the open, $21.83 was the close. So that qualifies most certainly as a doji candle out there. And that says that actually the high of Friday should be resistance. Now, you get a close above that. That all of a sudden says, hey, guess what? This 200-day exponential moving average, perhaps that is becoming a support level. A lot of time left in the trading session. The high of Friday was $21.97. You're just trading slightly above it right now. That's the message of the daily chart out here. We'll take a look at weekly charts and so forth. Now, what we can also see is you can see this red diagonal line on my screen here on the daily chart. That is the descending price channel. So what we're now seeing out here is we're actually, if you get a close above that today, the most bullish thing that you could see would be tomorrow, the next day, whenever it comes back and it tests the red line, it tests that descending price channel, and it holds above that. You've got silver. It is in the extreme. It's not the extreme, but it is in an overbought condition out here. What you don't want to see silver necessarily do is make a higher high and do it on less relative strength, and that's what's going on here right now, and then follow that up with a bearish candle signal out here. That's if you're bullish on the stock. So we're just simply going to take the message of the market as it doles information out to us. That's the information that it doled out to us on Friday, so we know where there's some resistance inside of silver, just simply by the message of the bulls and the bears. A little different story here with regard to Goldilocks. Gold right now is trading out at $13.34. The red little squiggly line on my screen out here, that's your 200-day exponential moving average. That's at $13.29 out here, so you're trading really just slightly above that area that has acted as resistance. We know that gold has formed a 0.618 Gartley sell pattern. Now, that Gartley sell pattern was confirmed. That was on the trading session of February 19th when we had that little bearish engulfing candle. Unfortunately, that confirmation just kind of went away, and it went away on that very next trading session because it was erased out there. And that's where it's so important to get a double confirmation out here. You did not get that inside of gold. It, too, is in the overbought territory out here. No bearish candle, no doji candle, anything like that occurred here on Friday. So no other real signs of resistance. Gold here getting close to making that 100% move of a move. And that's out of the trading session from October 28th. The low there is 13.46. I actually see no reason for gold not to go and spike that level out here, especially the way that it is trading at the moment. So that's what's going on inside of gold. If we go take a look at the week came to an end. So let's go take a look at the weekly charts here. Of course, it came to an end. Let's go take a look at the weekly charts here for the ES Mini, see what we have going on. Speaking of doji candles out here, it's exactly what we had last week. I'll blow this up on my screen out here. Now, what we've got here, what I'm showing on my screen, I'm showing this price relative strength divergence pattern that's out here inside the ES Mini on a weekly chart. Now, weekly charts, they have more precedent over daily. You know, you've got less noise out here. In fact, if you have not yet had a chance to download my special report, I'd have to say you're one of the few then that have not downloaded it. Thank you to everybody that has downloaded that special report. Those are one of the reports you want to go ahead and download. Keep, in an archive off to the side because it's a pattern you absolutely want to be paying attention to. So if you haven't had a chance to do that, go to the homepage of TFNN.com. On the left-hand side, you'll see a little slider up and down. It's up towards the top there. It's just a special report, free special report, Market Tops and Bottoms by Steve Rhodes. Just go down. Do yourself a favor. Download that. In fact, tell your friends about it. Send a few of your friends over there to the homepage of TFNN.com. We would appreciate it out there and have them download it as well. Now, that says, because we have two patterns out here. We've got this price relative strength divergent pattern that actually was confirmed here. Let me get my crosshairs going out here. That was confirmed. The week ended January 24th out there. That says that this high on the prior session, which is the high of the week of January 17th, which is out at 1845.75, is very important. If we take a look at the candle session that occurred last week here on the weekly chart, you got a little doji candle out there. It says a close this week below that open, which is 1833.50 right now. You're at 1837.50. That'll tell you that you've got some leaves falling from the trees. But doji candles, folks, where they have the most meaning is where they have the most meaning for me is what I should say. Where they have the most meaning for me is when they are occurring at resistance levels. And they are really great tools there. Because fear is a greater emotion than greed out here. It tells you it's a sign of ambivalence by the stock traders out there, and that's exactly what we saw take place on a weekly chart last week as we ended the week out here. Now, the importance of that doji, if you just simply come back here, in fact, to the trading session back on November 1st. November 1st, you didn't see any leaves falling off the tree. The following week, November 8th, in fact, as soon as that doji candle was taken out, that was done on November the 15th, 2013. What did the market do? The market continued, in essence, to motor higher out here. So we do have some resistance. We'll see where things end up this week. That is on the S&P futures contract. Let's go take a look at the strong hands in the marketplace. Let's go take a look at the NASDAQ futures, the NQ. Right now, they're trading out at 36.71 and a quarter. What we can see here with the NASDAQ futures, they didn't form. It looks like a doji, smells like a doji, but actually doesn't really qualify. More of a spinning top type candle here last week. We do have price relative strength. That means that we're seeing higher price on less relative strength versus the high that was established all the way back here. This is the important session. December 6th was when we saw the largest, the most relative, the highest relative strength number calculation that was produced during this move out here. So the NASDAQ futures, the strong hands in the marketplace, are actually achieving higher highs with less relative strength. Is that important? Yeah, it's very important out there. That's what's going on there. No real resistance other than that inside the NASDAQ. Let's go take a look at the Dow. But we'll have to do that when we get back from this first breakout here. Again, our call number is 877-927-6648. It is Marvelous Monday, and thank you for joining us. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change in the futures out here. Dow futures up 13, S&P futures up 3. So speaking of the Dow futures, that's where we left off when we went into that first breakout here. Now, if we're taking a look at the screen on the, we're looking at the weekly chart here for the Dow futures. We can see that same price relative strength divergence pattern that was formed up here. That was the week of January 3rd. Now, it shows as a bear harami candle out there. That's nothing more than a pause button. So that is not it's not a reversal candle out here. But what you did get is you finally got this reversal here. Now, you know, I refer to most candle signals are going to be reversals out there. Only a couple of them are continuation patterns. And then, quite frankly, there's a ton of candlesticks that really are irrelevant. They just simply cloud your judgment. And Bear Harami is really one of those out there. Other than knowing that it's just a pause button, it really has no other relevance other than that. However, there is that candle configuration referred to as the three-river evening or morning star. In this case here, evening star, because it's forming up at the highs out here. Now, most textbooks, everything that you look at would tell you it's a three-candle formation. It's not. In fact, the candlesticks that have the most meaning are the ones that take a little bit longer to form out here. In this case here, now, what's typical of one of those patterns is you normally have a large, longer, up-thrusting bar. We didn't really have that up-thrusting bar here on the week of December 27th. But, we had the holidays out here. I'm going to go ahead and join those two candles together out here. That's the candle session from the week of December 20th as well as the 27th out there. Then we can see three small-bodied candles traveling with inside the upper portion of this body here, and then big down-thrusting bar. In fact, we could join these two candle sessions together, those two being January 24th as well as January 31st out there. It's all about visualization out here, and that's what I visualize. That's what I see as the big reversal signal here inside of the Dow out there. Now, what do we have forming? Well, the key here, and I believe it was there on the ES Mini on the NASDAQ as well, but whether it was or wasn't right now, let's just pay attention to the weak link. And the weak link here really is the Dow, right? So as we do, and I can say that, you can say that, because it has not made the same type of retracement that the other indexes that we're looking at has. So if there's going to be any cracks in the market, looks at this stage here, that's going to be the Dow where we're going to get that signal from. And that's why we really want to be paying attention to the weak link out here, because what the Dow did, as well as many of those other indices, is they formed a nice big old hammer candle, and that was the week ended February 7th, 2014. And that is important, because should we see that low get broken out there, folks, that will be very bearish out there. Hammer candle, it's a one candle reversal session out here. That says that low out there inside the Dow futures at 15,276 is muy importante out there. That's the number that we want to be paying attention to. Hey, on any push lower, testing that area, not a big deal. But a close below that level would be a big problem out there, and that is on the Dow futures out there. Let's go to Scott in Orlando. Scott, thanks for calling. Thanks for holding. How are you this morning?
Pretty good, Steve. How you doing?
I'm doing excellent. Thanks so much for asking. You wanted to take a look at ticker symbol INO. Tell me what you're doing and how I can help you out here.
Well, I picked up some shares back around 2.25. Since then, it's gone up quite a bit. I've sold some of my original shares to cover my initial investment, so now I just have some free shares. And I just want to get your take on what do you think it's going to be doing in the near future.
Sure, absolutely. What's your when you got into the trade? Is this a long term? Inovio Pharmaceuticals? INO. How'd you pick up on it? Is there some fundamental or anything behind it? And what's your plan as far as the length of time you want to hold it?
Just a short-term trade. I picked it up originally from some information I got from the newsletter, and it's done well for me since.
All right. Let's take a look at Friday's action here. Friday's action was taking out a set of swing points, a little resistance area. That was up here at the highs of about $3.03. There was 29 million shares that traded up there. This was on the trading session here on August the 6th. You went above that level with 20 million shares, which isn't too bad. It's more than the last time up there on December 27th. Of course, that week was a light week out here. As long as it stays above the $3.03 mark, though, this thing could be setting up a small A to B equals CD up. That A to B equals CD up pattern, Scott, would take it to a projected price level between 364 and 401 out there. So that's on a pretty short-term basis. If I take a look at a weekly chart out here, yeah, weekly chart says should find some resistance around the 426 to 385 level. Hope that helps you out.
It does. Thanks a lot, Steve.
You bet. Thanks so much for calling. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 58 points, trade out at 16,162. The S&P up 7, trade at 1843. Composite up 16 points, trading out at 4279. Russell 2000 joining in on the charge. It's up 4 points, trading at 1168. Leading the charge to the upside, Palo Alto Networks up $5.73. PANW is the ticker symbol. I believe they were out with numbers here before the bell. Yes, they were. Let me see their revenue here, if I can find it. The revenue was up 46% to $141 million versus $96.5. That semiconductor index has been just simply on fire out here. We've got Sina Corp, SINA. They're up 5% this morning, up $3.77 out there. Joseph A. Banks getting a new tender offer from the Men's Warehouse, I believe. That's trading up 7%, up $4. You've got Concho Resources, CXO is a ticker symbol. It's up 3%, up $3.38. Cummins Inc., CMI, up about 2%, up $2 and change. Auto Home, ATHM is the ticker symbol. They're out with the numbers. They produced revenues were up 74%. That looks like a China company out here because I see RMB next to it. What is Auto Home? Let me see here. Auto Home operates as an online destination for automobile consumers and the people People's Republic of China out there. So, yes, it was a Chinese company. No big deal. You've got to the downside here, Vodafone Group, VOD, is the ticker symbol. They are trading down about, 42%. What the heck is going on out here? I'm just looking here to see if I can find some news. Says Portugal sees over 120,000 TV. Boy, they didn't just slam this morning. We'll go take a look at the stock chart, see where it's trading down to. You got Cognate Communication Group, CCOI. That's off 13% this morning. I don't see any news behind that. That's off $5 and change. Dillard's, the department store, DDS, down 5%, off $4 and change. They were out with numbers. They generated light on the top line, $2.03 billion versus $2.106 out here. Net income $119 million versus $161. So Dillard's taking it in the shorts here this morning. So fun. We're having so much fun. SFUN is the ticker symbol. It is down 5% off $3.80 out here. Kinder Morgan, KMP, down 6% off $5. 3D Systems off 3.5%, down $2.80. Armstrong Worldwide, AWI, off 4.5%. Let's I was going to say, hold on a second here. Let's kind of focus in here on the ES Mini. We are now starting to see a break here above the consolidation. A true break above the consolidation is going to be, this is the 120-minute chart. We'll go over and take a look at a 30-minute chart. So we'll focus in, let's try and draw the pattern on the 30-minute chart here. So forgive me for a moment, but actually just want to kind of help you, whether you're long or short, or you're looking for a trade out here. You want to be paying attention. So I'm going to go ahead and just simply delete everything off. Well, I don't necessarily need to delete everything off this chart here. Let me delete a couple of things out here, and it'll make it a little bit easier for us to follow along. Okay, so we're going to take a look at the ES Mini right now, and you can see it very clear. I can see. I think you can as well. Go ahead and draw a box around it. Is it what I call my circle? The heck, what did we see here? So we're going to take a look at, yeah, there we go. I don't know why. Well, I guess it's a circle because I could draw a circle. So here's the consolidation pattern that we're looking at in the 30-minute chart for the ES Mini. Now, this little consolidation may go back even further than this, but let's take the more conservative approach here. So we're looking at a price open right around the 1818. Let's use 1818 as the bottom, and let's use 1844 as the top. So 1840, 24, what is that, 26 points? I believe that's about a 26-point, 18, yeah. So 26-point consolidation. Let me just go ahead and mark that in here. So we've got the ES Mini trading up towards the top of that. So you got a 26-point consolidation. And we're going to be paying attention to that throughout the next couple of hours. So we can see here is the ES. I'll go ahead and make that a little bit larger for you, just so that you can more easily follow along. So as we take a look at it, if you're watching us on TigerTV, I'm just going back to the trading session here. It looks like about 11:30 in the morning or so, February 13th out there, and the lows right around the 1817 mark. So you can see that area was tested back here at about 1 o'clock in the morning on February 14th. We saw a market move up, and this is where the top of the consolidation pattern is that I'm using. That's the close at 11 o'clock in the morning on February 19th. That close was out at 1841.75. And you can see that price then went from the top of that consolidation all the way back down to the bottom of the consolidation, making 100% move. We're dealing here with a sideways consolidation market out here. So, hey, you've got the Dow's up 81. The S&P is up 9 points. If the ES Mini is able to take out this 1844 level, if it's able to do it with some conviction behind it, I don't mean like a small little bar, but if it's able to move beyond that, then all you have to do is take 1844. What did I say? 18? Yeah, about 1844 plus 26. So what does that make it? 1850, 1870. So let's just put in here the 1870 would be the breakout, right? And we'll deal with the breakdown if we see price stall out here and move down to the bottom. So that would say, and that's a pretty big move, right? 26 points out here. So you want to be, and that's about 250, 260 points or so inside the Dow out here. So we want to be watching this move for sure. We'll continue to pay attention to it here during the show, and we'll just see what happens. So that is on the ES Mini now. So we've got that all set, so we know, and we'll just kind of keep paying attention to that as well. during the show. Now let's go take a look at some of these stocks here that are moving and grooving and see what we've got behind the moves out here. So you've got, what did we have? Something was down big, and it is, how about that? It's off my screen. It's off my radar. So maybe there was a bad tick or something. In any event, let's go take a look at what is moving out here. And to the downside, not having so much fun today, is SFUN. So fun out here. So fun is off about 6% here. So fun is, let's see what they actually do out here. So fun is operate real estate, internet portal, and home furnishing and improvement website. Oh, this is the People's Republic of China. You'd think I could remember that. In any event here, let's go take a look at So Fun. It is down here this morning. It's coming into a swing point, trying to take out a B point of a potential A to B equals CD down. Trade into the February 6th level, the low of which is 71.77. Only 1.6 million shares down there. If you take a look at it, it's 349,000 shares so far today. So if it can take out that low, I should say, of 71.77, that'll set up your A to B equals CD down. That'll give you a price projection. The 1-to-1 will give you a 60-21. I don't think so. I think it'll come more likely down into the 1 to 1.272 or even 1 to 1.618 level. Come all the way back here to this little high volume swing point low on November the 7th. That range is 45.64 to 56.93 out there. That is on So Fun, SFUN. Let's go take a look at Dillard's here. See what the department chain is doing. DDS, it's off about 5% here this morning. Looks like with some volume, looks like it too is taking out a B point of an A to B equals CD to the downside out here. Let's just clean up the chart. So if we take a look at Dillard's, you can see this high volume breakout that took place inside Dillard's back on August 15th, 2013. Had some good volume there, 2.2 million shares. You're trading into that candle session here as we speak. Now, what it's also doing here, it's testing the swing point low from February 3rd, which is 83.86. So we're going to see if this area here is going to be defended. If it is not defensible, meaning you get it closed below 83.86, it sets up a doozy of an A to B equals CD to the downside here. Let's go check out what that pattern could look like out here. The high is going to be that little shooting star that formed on December 23rd out there, and that's at a price level of 97.87. That's your A point. Your B point out here is the low of February the 4th. That's out at 85.23. Makes a retracement. Looks like probably about a 0.382 retracement at B to C leg. Let's go measure that retracement out there. About a 50% retracement. So much for my eyes. If you get a close, though, below this B point, that is, again, 83.86. DDS is the ticker symbol, and that is for Dillard's. That projects 77.41 on your 1-to-1. Coming all the way back down into the swing points out here, back from the October 15th, 2000 level, only 754,000 shares. So far, though, you saw another little breakout here inside Dillard's, a small break to the upside. That was on November 13th, 1.3 million shares. So we can see that these volume bars out here, these funds are still trying to defend their position inside of Dillard's out here. Now, if Dillard's breaks below its current swing point, that gives you the A to B equals CD down, and you better hope that it holds this little consolidation, these lows here in about the 75.65 level. DDS was the ticker symbol. To the upside here, let's go take a look at T-Rex company out here. TREX is the ticker symbol. Trex, which is a manufacturer and distributor of wood, plastic, composite products, related accessories for the residential and commercial industry out here, business. TREX. Now, that's a cool ticker symbol. This is gapping up this morning. This here is trying to form an A to B equals CD to the upside. So this is right now trading into the swing point here from its most recent swing point happens to be December 24th, and that level's out there is at 83.04. It's only got 61,000 shares, so not a heavily traded equity out here. However, you're trading into it this morning. Did you hit it yet? No, you haven't hit it yet, but you're moving into it with volume. 132,000 shares already. Now, this thing has had some real nice signs of strength. So it looks to me, recently, it's had some nice signs of strength out here. Big one that occurred on October 25th. Went from a low, well, you really got to take a look at the prior session, in my opinion. So we're going to say it went from 52.74 all the way up to a high during the October 28th session, 25th session, I apologize, out at 68.72. Wide price spread, accelerated volume. We saw some additional follow-through that took place here on December 20th. This could be setting up a really nice A to B equals CD to the upside if it can take out the 83.04 level. Certainly trading into that with volume, and is giving you every indication that it wants to do that. Now let's take a look at what the daily pattern shows here, and that retracement looks to be a pretty decent retracement out there, about a 50% retracement as it came back here on February the 5th. Now, the 1-to-1, A to B equals CD. If it can get over its highs, do it with volume, the whole 9 yards, says you're looking at 103.76. That is on T-Rex Company. Let's take a look at the time frames. Let me pull this back a little further. Let's look at a weekly chart for T-Rex out here. Okay, that'll take it up to all-time highs out here on the weekly chart. So let me take a look at this other smaller. So, boy, this already has a confirmed A to B equals CD up on the weekly chart out here. And that's coming off of the low in October of 2011. That's at 1453. And we're going to use this little shooting star out here the week of June 21st. Now, the retracement there, it only retraces, looks like about a 0.382 retracement. That is down on September the 6th, gets down to 41.25 out here. Let's take a look at that. Just a 0.382 retracement. So this thing here, and you've got clearly take that back. It did not confirm it on a weekly basis because that June 21st session at 3.1 million shares versus 1.5 million shares. But boy, a wide-ranging bar out here. Hasn't confirmed the A to B equals CD to the upside on the weekly chart out here. But the daily chart says this thing wants to run into that, 103-ish type range, I believe, out here if it can take out these highs. This stock looks PDG out here, pretty darn good. Now I'm going to switch back and take a look at that. Take a look at that 30-minute chart here for the ES Mini. ES Mini is now breaking above the consolidation level. So you're at 1845 right now. Now, we've got, 12 minutes left here in this trading session, 12 minutes till we're off the air. But if you were to close out here at the 1845 level, you're coming into the consolidation with wide price spread, with accelerated volume. You've got 162,000 contracts. You're taking on a swing that has, 118,000 contracts out there, so you already got that with volume, and then pull back here 190,000. So we'll use 190,000 as our benchmark. That's at 10:30 in the morning. That's on February 19th. You close above 1845. You do with more than 190,000 contracts, which is very doable within the next 12 minutes out here inside the ES Mini. That ought to take us into the price projection of about 1870 out here. Of course, a failure to do so says if you can't bust them up, well, then it'll try to bust them down. But right now it's looking like it's going to try to bust them to the upside. So that means let's go take a look at the VIX Index. Let's see what we've got here. VIX Index this morning here looks like it gapped up or moved up and tested the 50-day exponential moving average. That 50-day exponential moving average is $14.88. You're trading at $14.15 right now. You know and I know that when you trade below that 50-day exponential moving average, that is bullshit. It just simply means there's liquidity in the marketplace. A couple different ways to measure liquidity. Certainly the VIX Index is one of those. The Summation Index, the price oscillator, is another way. And it already says there's lots of liquidity in the marketplace. That'll go ahead and move prices higher. 877-927-6648. We've got the Dow up 102, S&P up 11. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk risk of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is up 135 points right now. The S&P is up 14. And look, if you're short this market, please make sure you have some stops in place. Do not trade without stops. And at this stage here, I can certainly recommend do not trade. Do not be on the short side of this market here without having some stops in place. I don't mind you taking a short position. I mean, there's bulls and bears. We've each got to see, But please make sure you trade with stops out here. The reason is that as we take a look across the board here, I'll show you a couple charts that were included in this morning's newsletter out here, just to show you the importance of these patterns. If you're, happens to be the Rhodes Momentum Indicator signals, the charts. If you're watching us on TigerTV, the shaded box that you're looking at, that's a consolidation pattern here. Inside of this, the Dow futures, I believe it's about 225 points or so. Let me see if I can go. Well, let me see here. The low, maybe you can do the math for me. We're the low about 15,952. So let's call it 15,950, and the high out here 15,950 to 16,170. Yeah, so a 225 point move is what the consolidation pattern on this 120-minute chart here is projecting. And you're up above this level. You're up above the consolidation area with with a wide-ranging bar. So you got about 225 points to the upside as far as now these measured move. We took a look at it in silver. You can take a look at it across the board. You can ask me, hey, Steve-O, does it fail? Yeah, of course, everything fails. But what you got to do is you got to trade what you see right now. I mean, that's the most important thing that you can do. Most important lesson I ever learned was to check your opinions at the door and just simply trade what it is that you see, and then just simply when you see something change or something different, go ahead and make a change in the market. But inside the Dow futures, looking at just add 225 points to about the 16,000, 2. So what is that? About 16,004 and a quarter. So 16,004. You're at 16,219 right now. That's in the week link out here. So the week link, it's not just the ES Mini that is broken out of its consolidation pattern out here. We go take a look. I think the NASDAQ also has a consolidating pattern. Same kind of chart ought to show up on the screen there. So here's the NASDAQ, obviously stronger than the Dow at 2, breaking its consolidation pattern as far as what the NASDAQ is going to. The NQ is projecting. You're looking at, say, 36.40 to the, let's see, the high here, 36.86. So about 40-point move inside of the NASDAQ out here. You can see up above its most recent reversal signal out here, this little bearish engulfing bear sash candle. That took place here on the 120-minute chart. That was at the 12 noon time frame. That was on February 21st out there. So you got the NASDAQ, you've got the Dow futures, the ES Mini. We had taken a look at that. We'll punch that back up on the screen. That's about a 26-point move or so. So that's got that's clearly breaking above any kind of resistance out here. Now doing it on some light relative strength, I don't really care. It's doing what it's doing, and that is breaking above a consolidation pattern, and just builds up the way these consolidation patterns work. They just build up all this energy. It's like wrapping a rubber band, just continuing to wrap it around your finger every time it consolidates, and then finally when it breaks loose, either to the upside or to the downside. And you remember, the majority of the time, 65 to 70% of the time, consolidations will break in the direction that they are coming from. So this one here breaking in that direction as well. As far as the Russell 2000 out here, if we put that up now, I've got about a 10-minute delay. Oh, sorry about that. Looks like I'm going to have more like about a 12-minute delay as we finish the show. Folks, thanks so much for joining us on Marvelous Monday. Be careful out there, and I look forward to seeing you soon. Take care. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.